I am sure there will be a lot of people taking these prediction market bets. Most of them, the more they play, will lose money. This is not the same as investing in the stock market. If I buy a stock and I'm wrong in the first 3 weeks of buying it, it doesn't go to zero. I have to hold it for longer. It's a trade becomes an investment. If you're wrong on a prediction, it's zero. Go next.
Yeah.
Like,
I just don't think
how much of an appetite do we really think there is for that?
All right, well, that was our Josh Brown a couple of weeks ago as we debated prediction markets and how more and more companies are racing to get into that game. Our next guest, he saw the conversation live. He reached out to profess his profound disagreement with some of the points that were made. We invited him on, and he accepted. And he's Thomas Peterffy. He's the founder and chairman of Interactive Brokers, and he joins us now. So we're grateful that you watched, and certainly that you reached out, and even more so that you were willing to come on and have this conversation. Welcome.
Yes, thank you very much for having me. So about 10 years ago, I came up with the idea of asking yes or no questions and a $1 payoff about simple questions so that the probability is equal to the answer. The right answer is equal to the probability that the answer will be yes or no. And this was an attempt to teach Interactive Brokers customers about the probabilistic nature of the future. Now, I admit that it has happened that some people picked up on this idea and they come up with questions about the romantic life of celebrities and other frivolous questions. But basically the idea was to focus on economic and climate indicators, which are very, very, I believe, serious questions. As you on your shows frequently debate the question of economic indicators that basically explain how the economy has worked up to now or in the past, but not in the future. So if we want to look at the future, these kind of questions are very good at getting the consensus opinion, and they can serve as a hedging mechanism. And you know, the fact that some of the answers can go to zero, sure, just like options can go to zero. That doesn't mean that stock options are or index options are not good trading vehicles, and they are good investments, right?
I would also, I think it's worth a disclosure, too, that Interactive Brokers has also expanded into prediction markets a couple of years ago. So you obviously see the business sense in doing so. And I'm not necessarily sure that you and Josh disagree on the key point. I think that some of the original ideas behind these have been somewhat corrupted. I'm going to invite Josh into the conversation and let him make whatever points he'd like to, and then you guys can hash this out.
Thomas, thank you so much for joining us, and I'm a big fan of what you've built at Interactive Brokers. Congratulations on all your success. I'm also a bull on your stock, so
thank you, Jack.
Hopefully that buys me a little bit of latitude.
Some goodwill
to say this. Would you agree with me? Just because there's the presence of things like, I don't know, 0-day till expiration options, and that they can be used well, that doesn't mean the majority of the people who are in that market are making money from it. You'd agree with that premise, right?
So as far as prediction markets are concerned, only 49.5% of the people make money. Okay. And 50.5% of the people lose money. Yes.
Okay. According to the CBOE, on options, which you're comparing this to, 10% of options are exercised, 55 to 60% are closed before expiration, and then about 30 to 35% of options expire worthless. That's okay. People can make money and lose money.
Sure.
I have no issue with that. I think my broader point was, how big will the market really be for people who want to place bets on climate change, for example, or whether or not Marty Supreme will win an Oscar, or whatever the bet is. My point was, that's not going to be larger than the stock market anytime soon, maybe ever. I was trying to draw the distinction between a place to place bets, which is fine and valid, versus a place to invest.
I agree with you about frivolous questions, but there are incredibly serious. Climate change, for example, is a very, very serious question. You cannot deny that the sea levels are rising an eighth of an inch a year, right? So that really portends 1 foot for the next 100 years. And as long as that rate prevails, I think it's okay because we have plenty of time to prepare for it. But should it speed up, I think people should know. And there are indications that it may speed up. So it is important so that we can prepare for these things. The other question is, for example, elections. I mean, elections are a relatively poor way of determining where we go on the continuum between free market economy and communist dictatorship, right? So these questions are more important than, frankly, stock price.
I agree with you, and I actually prefer them as an indicator on things like elections versus polls, because people lie to polls, but when they're using money, they tend to tell the truth because they're putting their money at risk. So as an indicator, I like them. I think they're very powerful.
Let me also make this point, Mr. Peterffy, if I could, certainly in light of some of the recent news about, using prediction markets to bet on military action, certain bets that might have been made that are being accused of being nefarious in how they were done, whether there's an insider trading angle in all of this that needs to be dealt with. How do you think about all of that? As I said, you're in the business. We have a partnership with Kalshi now. Anybody from Fanatics, FanDuel, Coinbase, DraftKings, Robinhood, everybody's racing to get in here. But what about that question?
So, the CFTC requires us to survey for manipulation and, basically inside information and other things like that. And by the way, they are not supposed to list questions about war or military action and other questions like that are supposed to be prohibited. So I don't know how that got by. But so look, just like any market, especially at the beginning, things like, this has to be refined and regulated as we go along, and it will be. But I think that these markets will be much, much, much larger. I'm sorry, Josh. I do believe that these markets will be much, much larger than the securities market because, it's all the questions about our future.
You'll make the last point?
I believe that there will be huge betting volumes in these markets. I think you and I agree with that. I question whether we're not making enough of a delineation between an investment that's a stake in a company that you hold for the long term versus a market where you can go from one bet to the next, moving your money as you win and lose. I think there's a distinction that should be drawn. I
agree with you, but one more point I'd like to make. So long-term questions like the deficits for 10 years from now and things like that are, I think, very important. And you should know that we pay interest on the prevailing market value of the answer that you have purchased. So if you buy a 10-year question that will be resolved in 10 years, you get interest on the daily prevailing value of that answer. And so if you say you buy something at 20 cents, and if it moves to 80 cents, then the interest, of course, is 4 times as much as when you bought it, and the interest is 0.5% under Fed funds rates.
Mr. Peterffy, I can't thank you enough for your willingness to come on and have this conversation. The next reach out communication-wise is on our part. You come back and you talk about the markets with us the next time, all right? Appreciate having you.
Thank you very much. Thank you.